Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you go, and that's going to start out with talking about the economic data, see how that impacts the overall markets, maybe sprinkle in some geopolitical fodder in there, see how that's shaping up the old market analysis, and then talk about some option strategies we could implement into our portfolio based on these assumptions we come up with. So before you go, make sure you smash that like button for me. It helps out really. And comment, because if you have any questions or you want me to look at something, please throw it over there because I'll make sure I try and cover that. All right. So hope everybody had a great weekend. Happy Easter to everybody. And today, that being said, it's going to be a pretty light day, especially in form of volume, because across the pond is still a national or a bank holiday, let's call it, because of the Easter weekend. Europeans usually add a couple extra days there, today being one of those days. So I would expect today to be a pretty light day with most banks across the pond being closed. Here in the United States, though, this week we are going to get some good economic data. Remember, building permits, that's going to tell us if they're really still confident looking forward. Housing starts is another one that we've been talking about with higher interest rates. As interest rates start to increase, we're going to start seeing those bond prices drop. But the real catalyst here with interest rates rising is folks, when they're budgeting to buy a house, they cannot afford but a certain dollar amount each month out of their budget. Well, when interest rates rise, that means more monies goes towards the interest paid on that mortgage rather than the home. So you can imagine if interest rates are rising, you can't afford the same priced house as you would be otherwise. Okay, so that's going to cause housing prices to kind of stagnate a little bit, or at least should cause them to slow their momentum to the upside there. So keep your eyes up for any housing data going forward. All right, and then with that said, let's get on with the markets. See what's happening here. We can see crude oil continues to climb here, despite the fact that last week we saw that massive build. Remember, I was talking, the only thing that's really going to get oil to start rolling over here is if we start seeing manufacturing start to slow and these crude oil inventories really start to spike. And we saw that spike happen. Was it from the release of the oil reserves? Is that still a product of that? We're going to have to keep our eyes out. Most of that build was due to that, but think about it, folks. We were still knowing that information and expecting that in the data. So beating that number while we were expecting some release here in the oil reserves, and that would increase the overall supply to the market. Keep in mind that was still a beat on that number. So real financial folks were punching those numbers. All right. All right. Bonds starting to come off here a little bit, but finding a little bit of a bottom. What are we going to look at here? I've talked about this time and time again, folks, with the bonds and the mandate really that we're seeing here with the FOMC. These folks are going to be, let me try and switch this up over there. Let me get my pen over here so we can play around. What I was looking for here is this bottoming pattern. Now, what we want to see here is confirmation of that bottoming pattern if we were to get a full-on bottom, but an expected move only up to about here is what I would be looking for as a line in the sand. So this is places where we're starting to look for with the, we got volatility really high down here, folks. That means that prices in the premium for options are really expensive. Now, we talk about the levers and pulleys of that in the video, so please check that out. But an expected bounce would not go much higher than this, because remember, when we're talking about the levers and pulleys and we're talking about price, which is what we're seeing here, price going down, right? That means that we have interest rates on the rise. Now, we know that the product of interest rates is being pushed by the FOMC. So we know that they're going to look to increase interest rates. So downward pressure here in bonds is what we're looking for because of that higher interest rates going forward. Now, one thing that the bonds could be looking to do here is start to invert. We've talked about the shorter term interest rates looking like they're going to want to invert here. We've already seen that happen. That's a signal that interest rates are going to start looking to go a little bit lower here. See if I can't figure out how to use my pen here. I guess I gotta freak it out. All right, so there we go. All right, gold futures on the rise here as we're still concerned about the overall economic picture here. We're seeing interest rates on the rise. That's due to inflation and other aspects. Well, if we see inflationary aspects, that should give upward momentum to gold because that is a flight to safety mechanism. And I would expect to start to see some folks to really get involved with Bitcoin. Not seeing that as of right now, but Bitcoin should start to look to be a holder of value here at some point, I would expect. Why are we not? Let me just get rid of it. Try and get rid of it until I need the drawing again. All right, VIX. Coming off of the highs from overnight, but that's because we were on lower lows overnight. We're finding a little bit of bottom here. You see this in NASDAQ. It's a little overextended to the downside. Now, we were expecting this, right? We've talked about this last couple of weeks. We were expecting NASDAQ to get a little bit overextended to the downside compared to the rest of the equities. Well, that's exactly what's happening. But now that we've had that rollover there, folks are really starting to talk about tech again. I mean, you can't stop. You can't turn on the TV without hearing about Elon Musk and Twitter and the tech sector there. Well, that's going to start getting folks to talk about that in the mainstream media, giving a little bit of probably buoyancy here to the NASDAQ. E-mini S&Ps, everything's right there at the point of control with the Dow Jones, E-mini S&Ps. NASDAQ is a little overextended from their point of control, but one thing we saw is it is building a nice volume node down there. So finding support. Now, with all of this, we've got earnings this week. We don't have a whole lot of economic data that's going to really be driving this market. Some consumer price index, things like that. We do have a lot of Fed governors speaking, some forward-looking PMI numbers, but for the most part, earnings is going to be what folks are looking at to see the health of the economy going forward right now. And if there's any other geopolitical stuff going on, we still have Russia and China kind of causing a little bit of turmoil globally. That is probably more of a catalyst to drive these markets right now than economic data, because the economic data right now isn't the most robust economic data that we normally look at here. And with the equities kind of at the point of control, that's where folks are going to want to settle down. So you can see overnight inventory pretty flat here, not really coming up with any directional moves because everybody is really dependent on news right now. So I'm going to sit on my hands, keep my eyes out for anything. So I might pipe in here a little bit later. So make sure you guys are subscribing with the bell right there, because that bell tells you when I come in unannounced. All right, that's all I got for you folks. Have a great one. And if you can't take that, take it easy.